Welcome to the Deep Dive. We're diving into your stack of sources today, all about a really interesting niche in real estate. Balance sheet investing in Chicago.
Sounds fascinating.
It is. You sent over some really insightful material,
Mm.
especially from Michael Linton and the Chicago Deal Flow team.
Yeah, he really knows the Chicago market.
He does. We're going to break down the core concepts, look at a hypothetical example so we can really wrap our heads around it.
Okay,
And by the end, you'll be able to hold your own talking to any Chicago broker.
I like it.
You send over some research and articles, and one thing from Michael Linton really stood out to me.
Okay.
He argues that balance sheet investing isn't just for, the real estate giants out there.
Right.
It's a strategy that, with the right approach,
Mm.
can be accessible to, honestly, a surprisingly wide range of investors. But before we get too far ahead of ourselves, let's start with the fundamentals.
Sure.
Could you break down what balance sheet investing actually means, especially in the context of Chicago's real estate market?
Absolutely. In the simplest terms, balance sheet investing means using your own funds to purchase a property,
Great.
rather than relying heavily on loans or outside investors. Now, Michael Linton defines this as investing in real estate assets using an investor's or company's own funds, allowing for greater control and potentially higher returns, but with increased risk exposure. This approach gives you incredible control and agility, which can be a huge advantage in a fast-paced market like Chicago.
It's like having that ability to move quickly when you see a great opportunity, right?
Precisely. Imagine this. You see a listing, and it checks all your boxes. It's perfect for your investment criteria. With balance sheet investing, you're not scrambling to secure financing or get approvals from partners. You can move decisively, make a strong offer, and close the deal, potentially faster than anyone else.
See, and that speed, that could be a real game changer in a competitive market like Chicago, don't you think?
Absolutely, especially in neighborhoods like Fulton Market or the West Loop, where properties move quickly. But it's not just about speed. It's about having the flexibility to tailor your approach to a specific property.
And a specific neighborhood, too.
Exactly.
Okay, so we've got a good handle on the what. Now let's talk about the why. Why is this strategy gaining traction in Chicago specifically? And why should our listener be paying attention?
Well, Chicago's real estate landscape is incredibly diverse
It is.
and dynamic, which plays perfectly into the strengths of balance sheet investing.
Okay, so I see where you're going with this. Chicago isn't a one-size-fits-all market.
Exactly. You've got the high-rises of the Loop, the trendy lofts of Fulton Market, the historic charm of Lincoln Park. Each neighborhood has a unique character
All right.
and its own set of investment opportunities. This diversity allows balance sheet investors to be very strategic, targeting areas where they see the most potential and tailoring their approach accordingly.
And because you're not relying on that external financing,
Yeah.
you've got the freedom to get creative with it,
Yeah.
right? You can really tailor your strategy, as you said, to the specific property, the specific neighborhood.
Exactly. It's about seeing the potential that others might miss. Maybe it's like a mixed-use building in Pilsen
Okay.
that could be transformed into a hub for local artists and entrepreneurs.
I love that.
Or maybe it's a vintage apartment building in Ukrainian village that could be carefully restored, back to its former glory.
Right.
Balance sheet investing just gives you that agility to make those kinds of visions a reality.
See, this is making me want to go out and just explore Chicago neighborhoods with fresh eyes, right?
Yeah.
But before I get carried away, I think it would be really helpful to kind of ground this strategy in a real-world example.
Sure.
And Michael Linton actually provides a great one in these materials you sent over.
Okay.
It involves a hypothetical firm he calls Chicago Skyline Investments,
Okay.
or CSI.
Yeah.
And their acquisition of a mixed-use property in Logan Square.
Okay, yeah. That's a great example. It really highlights how balance sheet investing can play out in a specific neighborhood.
So let's say our listener has been eyeing Logan Square, which we know has been experiencing a surge in popularity lately.
Right.
What would be the advantage of using this balance sheet investing approach in a scenario like that?
Well, picture this. CSI identifies a mixed-use property in Logan Square, ground floor retail, apartments above. It's valued at, let's say, $10 million.
Okay.
Now, because they're operating from their balance sheet, they can move quickly and decisively.
Right.
They make a compelling offer, and without the need to secure financing or wrangle partners, they close the deal in, say, 30 days.
Wow. That's lightning fast in the world of real estate.
It is. And that speed can be a major competitive advantage, especially in a hot area like Logan Square.
For sure.
But it's not just about speed. CSI, by using its own funds, retains complete control over the property and its strategy.
They're not beholden to anybody else's timeline or demands.
Precisely. So they might take a longer-term approach, which really aligns with that balance sheet investing philosophy.
Oh.
In this case, perhaps they focus on attracting um, unique local businesses to that retail space,
Right.
understanding that this will enhance the property's value over time
Yeah.
and cater to the neighborhood's kind of evolving character.
It's like they're not just investing in a property, they're investing in the community.
That's a great way to put it. And this leads to another key benefit, flexibility. Let's say 5 years down the line, CSI sees an even better opportunity emerge, maybe in Pilsen or Humboldt Park,
Okay.
because they're not locked into a specific hold period
Yeah.
dictated by a loan or partnership agreement.
Right, right.
They have the freedom to divest from that Logan Square property on their own terms and seize that new opportunity. It's about being nimble, being responsive to, the Chicago market's always changing, always evolving.
It's about staying ahead.
Yep.
Okay, I have to admit, this is sounding pretty appealing. It's like having that freedom to really chart your own course.
It is.
But, we've got to talk about the other side of the coin here. As with any investment strategy, there are risks and considerations to be aware of.
Oh, absolutely. It's not all sunshine and rainbows.
So let's talk about some of those potential downsides.
Yeah.
What are some of the risks that our listeners should be aware of when it comes to balance sheet investing, especially in a market like Chicago, which we've been talking about?
Right. Well, I think one of the biggest risks, and this is something that Michael Linton really emphasizes,
Okay.
is concentration risk.
Because you're using your own capital, you're inherently tying up a larger portion of your funds in a single asset or market.
Right. It's putting all your eggs in one basket, so to speak.
Exactly. So if the Chicago real estate market were to experience a downturn, that concentrated investment could really expose you to more significant losses
Right.
compared to a more diversified approach.
That makes a lot of sense. It's about really being aware of and comfortable with that level of risk that's involved. Now, you mentioned diversification, which makes me think about liquidity. How does the liquidity or the lack thereof factor into balance sheet investing?
Yeah, that's a really important point. Liquidity refers to how easily you can convert an asset into cash. And real estate, it's not like stocks that you can just, buy or sell with a few clicks.
Mhm. Selling a property takes time, it takes preparation, and of course, finding a buyer.
So if you suddenly need access to that capital that you've invested, real estate might not be the most liquid option, right?
Exactly. And when you're using your own balance sheet, you're essentially locking up that capital for a potentially extended period.
Right.
So it's essential to consider your overall financial situation and, make sure you have that liquidity elsewhere to cover, maybe unexpected expenses or even opportunities that might come up.
It's about having that strategic financial plan in place and knowing your own, risk tolerance, right?
Exactly.
Now, we've talked a lot about the financial aspects of this, but I imagine there's a significant learning curve when it comes to balance sheet investing, especially in a market as nuanced and complex as Chicago.
Oh, absolutely. I mean, navigating Chicago's diverse neighborhoods, as we've been talking about, requires a deep understanding of those local market trends, zoning regulations, even the nuances of each community.
Right, because what's considered a prime location in one neighborhood might not be as desirable a few blocks over.
Exactly. And that takes time, research, and ideally guidance from, seasoned professionals who really know the ins and outs of the Chicago market.
So it sounds like having that trusted team realtors, lawyers, contractors, that can make a world of difference in a strategy like this.
Absolutely. And let's not forget the operational side of things, too.
Right, because with balance sheet investing, you're not just passively investing. You're often taking on the role of, a landlord or a property manager. So you need to be prepared to handle finding tenants, collecting rent, dealing with maintenance issues, all of that.
It can be quite demanding, especially if you're managing multiple properties. So, it's really essential to consider, do you have the time, the resources, the inclination to take on those responsibilities?
It's not as passive as it might seem on the surface.
Exactly.
So balance sheet investing, while potentially lucrative, is not a passive strategy. It requires that active involvement, a deep understanding of the market that we've been talking about,
Right.
and a willingness to roll up your sleeves and really get your hands dirty.
You got it.
But as we've discussed, those efforts can be incredibly rewarding, especially in a city as dynamic and opportunity-rich as Chicago. It's all about weighing those potential rewards against the risks that are inherent in any investment strategy and deciding if this is the right fit for your personal goals and risk tolerance. Now, before we wrap things up, I think it'd be helpful to put balance sheet investing into context. How does it compare to some other real estate investment strategies that our listener might be considering?
Yeah. So let's start with syndicated investments.
Sure.
With syndication, you're essentially pooling your money with other investors to purchase a larger property or a portfolio of properties.
Okay.
This can be a good way to, access bigger deals that you might not be able to afford on your own
Right.
and diversify your portfolio. However, you're also sharing control and decision making.
So there's a trade-off there.
Hmm.
Potentially bigger returns, but less of that direct control that we've been talking about.
Exactly. Then there are real estate investment trusts, or REITs.
Right, REITs.
REITs are publicly traded companies that own and operate income-producing real estate.
Right.
Investing in REITs can provide liquidity, diversification, but again, you're giving up that direct control over individual property decisions.
And then, of course, there's the debt side of things. You could always become a lender in the real estate market.
Exactly. You could explore debt investments, such as, providing loans for real estate projects.
Yeah.
This can offer some steady returns through interest payments, but your upside is usually going to be more limited compared to direct ownership.
Right, because you're not participating in that appreciation potential.
Ex-
So it seems like every strategy has its own set of pros and cons, its own, nuances. It's about finding that right fit based on your individual goals, your risk appetite, and really, how actively you want to be involved in the investment itself.
Absolutely. And, Michael Linton's work that we've been talking about today offers such valuable insights into all these different approaches.
He does, yeah.
I highly recommend checking out his website, chicagodealflow.com, for a much deeper dive into all things Chicago real estate.
Yeah, that's a fantastic resource for anyone listening who wants to kind of take that next step in their learning journey. Thanks for that reminder. So as for our final thought, think about how the unique advantages of balance sheet investing that we've been unpacking today, how those might play out in a specific Chicago neighborhood that you're interested in, that you've had your eye on. Could this be the strategy that unlocks your next big real estate move? Until next time, happy investing.